Hello and welcome. Today I will be talking about liquidity and how to avoid being trapped in the liquidity zones. So basically, liquidity in forex is money in form of stop losses and pending orders. So retail traders who use chart patterns will identify this zone like as a double bottom, and they are likely to take a buy and then put their stop losses below this zone. So for the buy side liquidity, this appears like a double top. Actually, it's a double top. So retail traders would take their sells and then place their stop losses just above this zone. It's important to note the big players in the forex market. We have the commercial and investment banks, central banks, businesses and corporations. These are large institutions that change the direction, they influence, they change the direction of the market. As price continues to form these chart patterns such as the double bottom or double top, big players in forex market are watching because they understand that most retail traders are placing their stop losses and they are taking their trades in such zones. So big players in the market will always liquidate the retail traders before they take their large moves, whether it is buy or sell. So their way of liquidation is by manipulating the market as if they are taking a sell, and then once they have hit all the pending orders or they have stopped most of the retail traders, now they take their move to the buy side. So on the buy side as well, they take a false move to the upside to just hit all the stop losses of the sellers here, and then they take a big sell downside. So if we are taking this example of pound dollar, I'm using 4-hour time frame. So we are in an uptrend. We're forming swing high, swing low, higher high, higher low. So we're expecting a high high because we're in an uptrend. However, there is equal loss here, which is a liquidity zone, and big market players will liquidate this zone before taking continuous move to the upside. So as a retail trader, do not jump into a trade just because of the equal loss. Take your time to see how the big institutions will move, because these are their targets. You are sure that this is a move to the upside, but you want to wait until the big institutions or the big players have taken the liquidity, and then you just join with them so that you move together to the upside. So look at this candlestick. So you are wicked off because most of the stop losses are here within this area. So this wick is a confirmation that this was a liquidity grab and there was no move. It was a false move to the downside. Of course, most retail traders took a sell as well, thinking that this is now the direction has changed. But for whatever reason, big players are just removing all the retail traders who are just placing the stop losses within this zone. Then they take their move to the upside. Let's see. Look at that momentum, that humongous candlestick. So the move is on the right direction, but already it has stopped you out, and then the move continues. It was a huge move. So here is another example of Euro USD. So whenever you come across any ranging market, you do not jump in, you wait for a liquidity grab. For example, in this case, there was a liquidity grab here, and then before it moved the upside. Also, there was a liquidity grab here by this candlestick, the long wick. So this was meant to manipulate to remove all stop losses here before moving downwards. So if we continue to the right side, there's another area. Look at this. So this area is a liquidity zone. So there was a manipulation of this area. So you don't just take any buys within this region. You wait for the manipulation to happen so that you join with the big institutions, you take a buy, and this was a good risk reward ratio. So if you took a trade here, you would just take your first profits, partials, with risk reward ratio 1:2, which is still a good one. Again, if you look at these equal eyes, it's an equal eye zone here. This is a liquidity zone. So retail traders could have placed their stop losses here. Many traders are looking to short here, but the market, the price moved the eye, which liquidated most of the stop losses here before coming down. So you can go on and on to backtest this. This is another example. This that appears like equal eyes. This can be a liquidity zone. So which was later manipulated before moving down. Again, you can look at this zone. Another area liquidated, moving up. Also this long candlestick, remove the stop losses at the top here, wicked it off before coming down. So to this far, let me know if you are getting value from this video. Please like the video, let's share to your friends and family, and if you are new to this channel, please consider subscribing so that we continue growing together as I continue posting content like this.